Listen, write down question number 41. Write down an assumption. In this question, it is assumed that. In this question, it is assumed that. In this question, it is assumed that opening stock of finished goods. In this question, it is assumed that. Sorry, first, in this question, it is assumed that opening stock of, right, opening stock of finished goods is equal to closing stock of finished goods and opening stock of work in progress is equal to closing stock of work in progress. So it is an assumption in this question. So listen, if opening stock of work in progress is equal to closing stock of work in progress and opening stock of finished goods is equal to closing stock of finished goods, in such cases, we can say that works cost is equal to cost of goods sold. We have to assume, otherwise this in your textbook this is not given. If you are not making this assumption, it is difficult to understand this question. Right? Listen, this one, if you want, I can tell you one thing. In the question, it is not mentioned, it is a newly formed company. If it is not a newly formed company, you can make this assumption because in the next chapter, that is what we are going to do. If you want, I have to go back and forth quickly. Let me show that. Next chapter in working capital management chapter, if you look at question number, I think third question and all, it is mentioned it is a newly commencing company. In these kind of questions, we cannot make the assumption because for newly formed companies, there is no opening stock. They will have only closing stock, right? If it is an existing company, in this chapter, we will make an assumption opening stock is equal to closing stock. Working capital. Here also for this particular question, we are making the assumption. Otherwise, this question will not work. I'll tell you why. Because in this question, see, generally, what is the formula for calculating gross profit? Sales minus cost of goods sold. In this question, what they have done is they have taken sales minus works cost is equal to gross profit. Sales minus works cost is equal to gross profit. This is what we have taken in the study material. This will hold true only when opening stock of finished goods is equal to closing stock of finished goods and opening stock of work in progress is equal to closing stock of work in progress. Because in such cases, works cost is equal to cost of goods sold because everything will cancel out, right? I hope you are getting the point. If you have understood cost sheet, understanding this is nothing. Did you all understand the logic? Clear? Now let's start solving this question. So in this question, gross profit is 15% of sales, net profit is 8% of sales. Raw material consumed is 20% of works cost. First, what is the formula for calculating raw material consumed? Opening stock of raw material plus purchases minus closing stock of raw material. Then direct wages is 10% of works cost. Stock of raw material is 3 months usage. So how to calculate it? We will discuss while doing the question. Stock of finished goods is 6% of works cost. Debt collection period is 60 days, which is nothing but receivables velocity. 90, what 90? 60 days. Then financial ratios are given. Fixed asset to sales, fixed asset to current asset, current ratio, long term to current liability, and share capital to reserves and surpluses. Now listen, if value of fixed asset on 31st March 2022 is 26 lakh, prepare a summarized P&L account for the company and we have to prepare balance sheet for 31st March 2023. Now listen, in this question, fixed asset is given as 26 lakh. So our starting point could be either fixed asset to sales or fixed asset to current asset. We will start from fixed asset to current asset first. Question number 41. Working note number 1. Current assets. So it is mentioned that fixed asset to current asset is how much? 1/4. 1:3. Sorry, 13:11. Okay. So it is 13:11. So what is the fixed asset? It is 26 lakh. by current asset is equal to 13:11. So how much do we get current asset? 22 lakh. Current asset is equal to rupees 22 lakhs. Is this clear? Any doubt? Next, what we can calculate is we can calculate sales, working note number 2, sales. It is given that fixed asset to sales is equal to 1:3. Fixed asset is 26 lakh by sales is equal to 1/3. So amount of sales is equal to 78 lakhs. Now listen, in the question it is mentioned that gross profit is how many percentage of sales? 15% of sales. So working note number 3, calculate gross profit. Gross profit. Gross profit is equal to 78 lakhs into 15 percentage. How much do we get? 11,70,000 is the gross profit. Now listen, what is sales minus gross profit? COGS generally, but in this question, COGS is equal to works cost. So working note number 4, works cost. Open a bracket and write down assumed to be equal to COGS. Assumed to be equal to COGS. So works cost is equal to sales minus gross profit. So what is the amount of sales? It is 78 lakh minus gross profit is 11,70,000. How much do we get? 66 lakh 30,000. Is this clear to everyone? Any doubt in this working note? Working note number 4. Next, now you can start from here and use all the relevant information. That is easy. First, we will do this one. First, it is mentioned that raw material consumed is 20% of works cost. So first calculate the raw material consumed as working note number 5. Raw material consumed. Sorry, why do we? I'm not getting your point. In the P&L it will come. Opening stock plus purchases minus closing stock. Instead of adjusting all these three, on the debit side, we will just write raw material consumed. Sorry? You will understand while doing the P&L. Just wait. So what is the raw material consumed? How many percentage of works cost it is? 20% of works cost. Works cost is how much? 66 lakh 30,000. How much do we get? 13? 13 lakh 26,000. Next, working note number 6. We can calculate direct wages. What is the amount of direct wages? It is 10% of works cost. Which one is given? Stock of? So? See, that one you will understand. Well, let me finish all these things. While preparing P&L, you will understand why raw material consumed is given. So how much do we get? 66 lakh 63,000. Similarly, calculate the stock of raw materials is given 3 months usage, right? So listen, this is something which you need to understand. This raw material is consumed during what period of time? During a period of 12 months, right? So for 12 months, if it is 13,26,000, for 3 months period, how much it will be? Into 3 by 12, right? So working note 7, stock of raw material is equal to 13,26,000 into 3 by 12. How much do we get? How much? 3,31,500. Clear? Any doubt? Next, what else we have? Stock of finished goods. Working note number 8. Working note number 8. Stock of finished goods, which is equal to 6% of works cost. 66,30,000. How much do we get? 3 lakh? Next, what else is given? Debtors collection period is given. So here have we calculated sales? Yes, we have sales. Then we can calculate receivables from this. Working note number 9. Receivables. What is the formula for receivable days or debtors velocity? Receivable days is equal to receivables into 360 by credit sales. In this question, it is mentioned that all the sales are on credit basis. So receivable days is how much? 60 days, right? So 60 days is equal to receivables, we don't know, divided by what is the sales? 78 lakhs into 360. How much do we get receivables amount? 78 lakh into 60 by 360. How much? Exactly 13 lakh. One second. But one more thing, in this question, what they have done is, in the textbook, I am telling, see, you can take 360. This is completely fine. But in the textbook, they have taken 365 days. That is what they have done. If you want to match the answer with textbook, we will take 365 itself. Better. Huh? Sorry? Yeah, decimal only. Take, what is the amount? 12 lakh 82,001 191.5. Okay, I'll round it to 191. That's all. Clear? Any doubt? Can we take it? Then see, then while while revising, you will see a different answer here, different answer in textbook, you will be confused. So it's better to match the answer with textbook. So far clear? Any doubt? So listen, in working note number 1, we calculated current asset, right? By done? By sorry? Net profit. Yeah, 8% of sales, we can directly calculate it. We haven't calculated it. We have to do that. We will do. Listen, we have current ratio and we have already calculated current assets. So with that, calculate the current liability. If we calculate current liability, with that, we can calculate long-term loans. So like that, we can proceed further. So working note numbers. What are the working note numbers? 10. Current liability So what is the current ratio given in the question? It is 2:1. So current ratio is equal to current asset by current liability. 2/1 is equal to current asset how much? 22 lakhs. So current liability will be equal to 11 lakhs. Next, what else do we have? We can calculate long-term loans. Working note number 11, long-term loans. It is given that long-term loan to current liability is 2:1. So what is the amount of long-term loan? You tell me directly. It is 22 lakhs, right? I hope everyone understood how did we get 22 lakhs. Then what else we have? We have share capital to reserves and surplus. So here, how can we calculate equity? Assets minus. So fixed asset plus current asset will be equal to total asset. From that, if we are subtracting the amount of debt and current liability, we will get equity. So working note number 12. Equity. So we know that equity is equal to total asset minus total liability. Total asset minus total liability. So equity is equal to what is the total asset, which is nothing but fixed asset plus current asset minus total liability is current liability plus non-current liability. So what is the amount of equity? Yes. How much? Total asset minus total debt. How much? Tell the amount. This is 26 lakh plus 22 lakh minus current liability is current liability. How much we calculate? 11 lakh plus non-current liability 22 lakh. Equity how much? Did everyone understand how did we get these numbers? Now listen. In the question it is mentioned share capital to reserves and surplus, which means total equity is 15 lakh, out of which 1/5 is share capital and 4/5 is reserves and surplus. 1/5 is share capital, remaining 4/5 is reserves and surplus. Did you all understand? Because equity capital consists of share capital as well as reserves and surplus. So calculate the amount of share capital and reserves and surplus. Share capital is equal to how much? 3 lakh. Reserves and surplus 12 lakh. Any doubt in this working note? Is it clear to everyone? Now what else do we need? We have to calculate net profit. Apart from that, do we have anything? Nothing else, right? So last working note, calculate working note numbers 12, 13. Net profit. What is net profit? Net profit is equal to 8% of sales. Sales is 78 lakh, write it down. So how much? 6 lakh? 24. So far clear to everyone? Any doubt in the working notes? So now let's prepare the trading and P&L account. That is fine. We will do that. We can directly write the amount. We calculate, 11,70,000 now. Prepare trading and P&L account. Particulars, rupees, particulars, rupees. You please follow the proper format. For saving time, I'm just doing a rough work. Trading and P&L account. So first by sales, what is the amount of sales? 78 lakhs. Now listen, on the debit side, first what do we write? To what? To opening stock, right? Listen, in this question, we are assuming opening stock and closing stock are same. So it will cancel out each other. So just write to raw material consumed. To raw material consumed. Huh? COGS, what you are writing that works cost itself. 66 lakh 30,000. Uh, let's present it properly. Raw material consumed 13 lakh 26,000. Then what else we have? Two wages. What is the amount of wages? 6 lakh 63,000. Then anything else that will come on the debit side? Gross profit, how much? 11 lakh 70,000. Now on the credit side, what will come? Credit side? Credit side sales is already written. Apart from sales, nothing will come. Why? Because we are assuming opening stock of finished goods and closing stock of finished goods are same. So it will cancel out each other. Net effect is zero. I hope you are understanding the point. Now you understood, right? Why we are not writing opening and closing. So if you are writing COGS also fine. Directly we'll write 66 lakh 30,000. But we calculated these figures for writing on the debit side of P&L only. Raw material consumed. That balancing figure is nothing but your other manufacturing overheads. Two manufacturing overheads, which is the balancing figure over here. What is the amount? Balancing figure? 46, 41. So what is the total? 78 lakhs on both the sides. So the main issue in this question is you have to understand works cost is equal to cost of goods sold only when opening stock of finished goods is equal to closing stock of finished goods. Opening stock of work in progress is equal to closing stock of work in progress. Clear? Any doubt? Prepare the balance sheet yourself and tell me the total. Oh, that is also there. Sorry. Net profit. First, by gross profit, 11 lakh 70,000. What is the amount of net profit? To net profit, 6 lakh 24,000. So you can write that remaining as a balancing figure. To admin expenses. What are the balancing figures? 5 lakh 46,000. For writing interest and all in this question, they have not mentioned the interest rate on long-term loans. So we are ignoring it. Next, balance sheet. Prepare it quickly, finish it off balance sheet and tell me the total. Listen, in this question, the balance sheet will not tally. The balancing figure will be the cash. I mean, tally in the sense, which means you will have a balancing figure. That balancing figure is cash. We did not do that in the working note. Let me show you. And one more thing, equity, you have to show the bifurcation. What is share capital? What is reserves and surplus? That bifurcation you have to show. Sorry? Yeah, stock will be shown on the balance sheet. Correct. But wait, we calculated inventory in this question. What is the amount of inventory? Total inventory? Total of balance sheet. How much you are getting? 48 lakh, 48 lakh. Correct. Huh? Wait, those who are not getting the balancing, I mean, those who are, see, listen, If you are just writing current asset, that is not correct. You have to show the bifurcation of current asset. So balance sheet as on 31st March 2023. Hmm. Yes. Liability amount, asset and amount. So first we have fixed asset. What is the amount of fixed asset? Fixed asset is equal to 26 lakhs. Then see, listen, simply don't write current asset and put the total. Show the bifurcation of current asset. For showing that bifurcation only, we calculated receivables, raw material stock, finished goods stock, everything. So under current assets, we have first receivables. What is the amount of receivables? How much? No, 12 lakh. 12 lakh? 84, 192. 82, 192. Next, we have inventory. Inventory, you show the bifurcation of finished goods and raw material. Raw material inventory and this thing. Finished goods inventory. Raw material stock, how much? Raw material stock? 3,97,800. And stock of raw material. Oh, 3,31,500. Then what is 397? Okay. So 331,500. Then finished goods stock 3,97,800. Next, what do we have? Next, what do we have? That balancing is your cash. So from total current asset minus all these things, whatever you get as the balance is the cash. So what is the balancing figure of cash? 177. 188 something. Cash, how much? 1 lakh? 88,508. Okay. So what is the total of the balance sheet? It is 48 lakhs. So on the liability side, first we have equity share capital. How much rupees? 3 lakhs. Then reserves and surplus 12 lakh. Then what else we have? Long-term loan, how much? 22 lakhs. Then current liability. So that's all. Current liability 11 lakh. So totally it is 48 lakh on both the sides. Clear? Any doubt in this question? Everyone understood? Done, everyone? Done? Shall we move to the next question? Shall we start? Next question. Look at question number 42. Ganapati Limited has furnished the following ratios and information relating to the year end 31st March 2023. Sales is given. Return on net worth is nothing but return on equity. Income tax rate is 50%. Share capital to reserve 7:3. By now, you should know how to use this ratio. You have to calculate total equity, out of which 7/10 is equity share capital, 3/10 is Reserves and surplus. Current ratio is 2:1. Net profit to sales is 6.25%. Inventory turnover ratio specifically mentioned based on cost of goods sold is 12 times. Cost of goods sold is given 18 lakh. Interest on debenture is 60,000. Receivables 2 lakh, payables 2 lakh. Most importantly, listen, in this question, they have given the balance sheet format. So here, what is important to understand is payables is the only current liability. So while calculating current ratio, you have to take this payables as the only current liability. No other current liabilities are there. I hope it is clear, right? Now, first requirement of the question is to calculate operating expenses. So first, let's do it. And one more thing, similar, this is a study material question. Similar kind of question was tested in your past year paper. Exactly same. Only the numbers are changed. I think that is question number 57 or 58. Right? So I will do this question. You can take that as your homework. Question number 42. Requirement A, calculation of operating expenses. So first, for calculating operating expenses, we have to prepare the income statement. So start it from sales and prepare the income statement. GP minus interest and all it is there, no? We have to do a reverse calculation here. Listen. So income statement first sales. What is the amount of sales given? It is 60 lakhs. From sales, what do we subtract? COGS of 18 lakh rupees. So what is the amount of gross profit? Gross profit is 42 lakhs. So far clear, right? Now listen, from gross profit, we have to subtract operating expenses and that will give us operating profit or EBIT. That will give us either operating profit, which is known as EBIT. Now listen, this is something which we need to calculate. So let's keep it as X. Now from here, let's do the reverse calculation. Now listen, in this question, we can calculate net profit or not. How can we calculate it? Net profit is given us? No, how do we calculate that? 6.25% of sales, right? It is mentioned that where net profit to sales is 6.25%. So net profit is nothing but 6.25% of sales amount. So write down net profit. Question it is mentioned net profit to sales is 6.25%. So when you take 6.25% of sales, that is nothing but net profit. Net profit is equal to how much? Sales is 60 lakh into 6.25%. How much? 3,75,000. Clears? Now minus tax. Tax is at 50%, right? Tax is at 50%. From profit before tax, we would have subtracted and we would have got net profit. Now listen, we don't know what is profit before tax, but if I'm keeping it as X, out of which 50% is gone for taxation, remaining 50% is profit after tax. I mean, yeah, net profit, right? So what should be the profit before tax then? 3,75,000 divided by 50%. How much do we get? 7,50,000. So 7,50,000 is profit before tax, on which 50% is gone for tax and remaining 50% is profit after tax. Is this clear to everyone? Any doubt in this? Now to profit before tax, what do we need to add? Interest. If we add interest, what do we get? What is that amount? Nothing but operating profit or EBIT. So what is the amount of interest? Listen, in this question, it is mentioned interest on debenture is 60,000. So interest amount is, sorry, 60,000. So if we add 7 lakh 50 plus 60,000, what do we get? EBIT, which is 8 lakh 10,000. Is this clear? Any doubt? Did you all understand this point? Clear? Now what should be the operating expenses? It is how much? 33 lakh 90,000. Is this clear to everyone? Any doubt in this first requirement? And ignore this space. Did you all understand? How did we get 33 lakh 90,000? Clear? See, it is clearly mentioned where this net profit is nothing but profit after tax. So it is always after tax only. Net profit is after tax or before tax? Net profit is PAT, which is profit after tax, right? This is nothing but net profit margin. What is the formula? Profit after tax by sales. If they are asking us to prepare P&L statement, we are using that old format, and there we are not showing any taxation. In your study material, no questions, it was shown like that. In this question, since we are calculating operating expenses, we are using this vertical form. But if the question requires you to prepare P&L statement, we will use the old method, this horizontal method. So there taxation will not come. Why it won't tell you? No. In these cases, you cannot prepare that P&L statement because how do we mean? That is what I'm saying. If the question requires you to prepare P&L statement, use the horizontal form. If you are calculating any particular component of the income statement, it is better to use this form. Okay. That net profit you are getting, no, that net profit is profit before tax. From there, you will calculate the tax expenses. For example, net profit that you have received is 1 lakh. Tax percentage is 50%. Out of that, 50,000 will go as tax and remaining is your profit after tax. That net profit is a profit before tax. Now listen, I will just fill the numbers over here itself. So now what is the fixed asset? How can we calculate? In this question, what is given relating to fixed asset? In this question also? No, everything is given. What is there for balancing figure? You can calculate everything. So first we will start with, we can start with the calculation of inventory. So write down requirement B, working note number 1, inventory. Inventory turnover ratio is equal to COGS by inventory. So what is inventory turnover ratio? How many times it is? 12 times is equal to COGS is 18 lakh. So what is the amount of inventory we get? Here we cannot calculate average. 1,50,000 is the amount of inventory. So we can put it over here where stocks 1,50,000. Next, what can we calculate? Receivables is directly given, so we can write it as 2 lakhs. Next, what else we have? We can calculate current ratio is given so that we can calculate current liability. So working note number 2, current liability. Current ratio is equal to current asset divided by current liability. Current ratio is 2:1. It's equal to current asset. We don't know, but what is the amount of current liability in this question? 2 lakhs, because we have only payables. So total current asset how much? 4 lakh rupees. Now listen, total current asset is 4 lakh, out of which 1 lakh 50 is stock, 2 lakh is receivable. So what should be the amount of cash? 50,000. I hope it is clear. Any doubt? Wake her up. Don't sleep. Clear? Any doubt so far? Next, what can we calculate? Return on net worth is given, so we can calculate the amount of equity. So working note number 3, equity. Return on equity is equal to how much? 25%. The formula is net profit by equity. So what is the net profit we calculated? It is 3,75,000. So what is the amount of equity? 25%. Sorry. So what is the amount of equity? 15 lakh. So out of this 15 lakh, 7/10 is what? 7/10 is share capital, 3/10 is reserves and surplus. So what is share capital we get? 10,50,000, reserves and surplus 4,50,000. Clear? Now we know that payables is how much? 2 lakh given in the question. Listen, for interest on debenture is 60,000. So what will be the value of debenture? 15% debenture means 60,000 divided by 0.15. How much do we get? How much? 4 lakhs. So what is the total liability side? 15, 19, 21, right? 78 lakhs. 21 lakhs, no? 15. Now fixed asset is 17 lakhs. Balancing figure. So in this question, fixed asset can be calculated as a balancing figure only. Clear? Any doubt in this? Finish it quickly. $60,000 is interest. 15%. You're asking current asset. That is nothing but summation of stock plus receivables plus cash. Done? Everyone till this point? Finish it quickly, and yesterday itself I told you 43 is your homework. Very easy question. Everyone done? Everyone done? Shall we move to the next question? Question number 44. Listen, 44 is slightly twisted. Listen. Question number 44. Following information has been provided from the books of Lakshmi Private Limited for the financial year ending 31st March 2023. Net working capital is given 4,80,000. Bank overdraft 80,000. Previous question. I'm not getting. Current asset is 4 lakh, correct. 17 plus 4 is 21 lakh. Here also 21 lakh total. What is your question? How 13 lakhs? That is a balancing figure. From where you are getting 13 lakhs? Oh, you're asking what about this current asset? This current asset is nothing but this plus this plus this. Got it? So now listen, question number 44. In this question, they have given fixed asset to proprietary ratio. So what are all the items that are included in proprietary fund? Equity share capital, reserves and surplus, and preference share capital, right? Now reserves and surplus is separately given. It is 3,20,000. Current ratio is 2.5:1. Liquidity ratio is 1.5:1. Now listen, in any question, if they are giving working capital and current ratio, that should be your starting point, right? Question number 44. Working note number 1. Current asset and current liability. The working capital is, there is something called gross working capital and net working capital. Gross working capital includes all your current assets only. Net working capital is current asset minus current liability. We will study that in next chapter, working capital management. Current asset and current liability. Huh? Current asset minus current liability is equal to working capital. Working capital is 4,80,000, which is equal to current asset minus current liability. So first equation I can write as current asset is equal to 4,80,000 plus current liability. This is equation 1, right? And it is also mentioned that current ratio is equal to current asset by current liability. What is current ratio? 2.5:1 is equal to current asset by current liability. So now I can write one more equation. Current asset is equal to 2.5 into current liability. I can write this as equation 2. So now I can equate this and we can get the value of current liability. Is it clear? You're all following it. So now we can say equation 1 is equal to equation 2. So 2.5 current liability is equal to 4,80,000 plus current liability. So how much do we get? 1.5 current liability is equal to 4,80,000. Current liability is equal to 3,20,000. Now we know that current asset is equal to 2.5 into current liability. So 2.5 into 3,20,000. So this is nothing but from equation 2. So current asset is how much? 8 lakh. So far clear? Any doubt in the first working note? Now listen. In this question, they have given assuming there is no long-term debt, right? So on the balance sheet liability side, we have current liabilities and equity share capital and reserves and surplus. That's all. So listen, you don't write it, just listen first. Liability side, we have equity share capital, preference share capital, reserves and surplus, and current liability. right? So now in the question, it is mentioned that fixed asset to proprietary ratio is 75%. So on the asset side, we have only two things, fixed asset and current asset. This whole thing, the first three items can be called as what? Proprietary fund, right? This out of this proprietary fund, we know that 75% is what? Fixed asset. And remaining 25% is what? Remaining 25%? Current asset or working capital? Remaining 25% is your working capital, right? So I can say that 25% of proprietary fund is equal to what? Working capital, right? So working note number 2. Listen, if they have mentioned like this is the shortcut to solve the question. In your textbook, they did not use the shortcut method and they have taken lot of working notes to solve it. But this is a shortcut method to solve it. No, we have payables also in this question. Bank overdraft is not the only current liability. We will have payables also. So working note 2, calculation of proprietary funds. PF. I don't know. I have to check. 25% of proprietary fund is equal to working capital of 4,80,000. So what is proprietary fund? 19,20,000. Is it clear to everyone? Any doubt in this? Huh? Sorry? You did not do all these things. But I got the answer. What is the total you are getting? I don't think that is correct. I think that is correct. I don't. See, just because the total is matching, it is not necessary that the answer should be correct. Because only proprietary fund is 19,20,000. What about current liability on the balance sheet side? So listen, working note number 3, fixed asset. Listen, in the question, it is mentioned that fixed asset is 75% of proprietary fund. Fixed asset to proprietary fund is equal to how much? 0.75. So what is the fixed asset? 0.75 into 19,20,000. How much fixed assets? 14,40,000. So far clear? Any doubt in this? Now the total of balance sheet will be 1440 plus current asset of 8 lakh. 22,40,000 it should be. 22 lakh. Before you told a different number. Oh, proprietary. How do we find out? In this question, there is no long-term liability. Correct. We have net working capital as 4,80,000. What is net working capital? Current asset minus current liability, right? So let me show it over here. Balance sheet side, liability side, we have 4 things. Equity share capital, reserves and surplus, preference capital or preference shareholders fund, and current liability. Asset side, we have only 2 things, fixed asset and current asset, right? Now, instead of writing this current liability here, I can write this current asset minus current liability. What I'm doing is, liability side, I'm reducing the current liability amount. Asset side also, I'm reducing the current liability amount. Still, the balance sheet is not affected. What is current asset minus current liability? Net working capital. So this is net working capital. This out of all these 3 things put together, we can call it as proprietary fund. Out of this proprietary fund, 75% is fixed asset. So remaining 25% is what? net working capital. Got it now? So 25% of proprietary fund is working capital. So that is what we equated over here. Clear? Any doubt? Now listen, in this question, quick ratio is given. With the help of that, we can calculate inventory. So current asset is how much? Current asset 8 lakh, current liability 3 lakh 20. Okay, with this we can calculate the amount of inventory. Working note number 4. Inventory. Quick ratio is equal to current asset minus inventory divided by current liability. What is the quick ratio? 1.5 is equal to current asset 8 lakh minus inventory we don't know divided by current liability 3 lakh 20,000. What is the amount of stock or inventory? How much? 3 lakh 20,000. 3 lakh 20 into 1.5. 3 lakh 20,000. Clear? Any doubt in this? Next, what else we have to calculate? That's all, no? Do we have any amount for calculating receivables? Cannot be calculated. So cash will not be the balancing figure. So nothing else. We can start with the balance sheet. Balance sheet as on 31st March 2023. Assets, amount, liability, and amount. So on the asset side, we have three things. First one is fixed asset, which is 14 lakh 40,000. Current asset, how much? Don't write current asset as 8 lakh. Show it as inventory separately and other current assets separately. Inventory 3 lakh 20,000. Other current assets 4 lakh 80,000. Similarly, liability side, we have equity share capital, reserves and surplus, preference share capital, and current liability. One more thing, current liability show the bifurcation, bank overdraft, and remaining is your accounts payable. So equity share capital, how much? Equity is, okay, what is the total proprietary fund? 19 lakh 20, no? Oh, okay, preference cannot be calculated. Or? See, reserves and surplus, we take 3 lakh 20. Ratio is not given. Reserves to equity share capital ratio not given. Then do one thing, don't show equity and preference separately. Just write it as shareholders fund. Shareholders fund is 16 lakh. Then write share capital, sorry, not shareholders fund, sorry. Share capital. No. Bank overdraft, how much? 80,000. So remaining accounts payable is what? 2 lakh 40,000. Correct? So what is the total? 22 lakh 40,000. Which one? Okay, correct. Fine. Equity. You okay, you are subtracting only current liability. Correct, correct. Debt, correct. Everyone done with 44th question? We will start with 45. Listen. Listen. For this question, this is a study material question. The solution given in your textbook for this question is not correct. It is wrong. But we will not correct the solution. We will correct the question. For this, just huh? No, question is, answer is wrong. But we will, if you are correcting the answer, then your study material answer will be different. We will correct the question and we will get the same study material answer. Just ignore this share capital. Equity share capital, ignore. Okay. Just solve this question as if it is not given in the question. That's all. If you are ignoring it, then we will get the right answer. No, no, it has. We have to calculate the equity. The number is not correct. Because in the question they have given it as 18 lakh. In the solution they have given equity as 22 lakh 50,000, which cannot be justified. So that is a mistake. Sorry? Here they are not doing all those things. You can't assume which is not given in the question. No. Just ignore this equity and do it. We will get the same answer as study material. We have to calculate equity. Question number 45. Listen. So current ratio given, debt equity ratio given, return on total asset after tax means which formula we have to use? PAT plus interest by total asset. But here, okay. Total asset turnover is given, gross profit, stock turnover. Listen, in this question also, net working capital is given and current ratio is given. So your the starting point should be the same as the previous question. Working note number 1, current asset and current liability. I'm not going to do it. You just calculate the current asset and current liability quickly and tell me the numbers. I'll give you 2 minutes time. Calculate it quickly. Yes. Sales by fixed asset. What? Nothing is there. I have not. Calculate current asset and current liability. Listen, the requirement is to calculate only ratio. You don't need to prepare balance sheet. Current liability and current asset, how much? Current asset, how much? Current liability, how much? How much? Current asset. Current liability. Did everyone get these numbers? 22 lakh, 50 and 9 lakh. Next, we will do the total turnover, asset turnovers. Before that, everyone done till this point? Any doubt? Did everyone get these two numbers? Got it? Correct. So, anything. But I will do from total asset turnover. Working note number 2, sales. Listen, what is the formula for total asset turnover ratio? Sales by total asset. Total asset turnover is equal to sales by total asset. So in this question, how do we calculate total asset? It is nothing but fixed asset plus current asset. So total asset turnover ratio is 2 times is equal to sales is something which needs to be calculated divided by total asset, fixed asset is 30 lakh plus current asset how much? 22 lakh 50,000. So what is the amount of sales? How much? 100 and okay. How many? 5 zeros, right? 105 lakh. Clear so far? Any doubt? Now listen, one more important thing. In this question, opening stock is given, which means we have to take average stock or closing stock. Average. So from stock turnover, calculate the average, and cost of goods sold given no, for which we can apply gross profit and calculate cost of goods sold. So working note number 3, COGS. COGS is equal to sales into how many percentage? Gross profit is 20 percentage, means COGS should be 80 percentage. How much? 84 lakh is COGS. So now using inventory turnover ratio, calculate the average inventory. So working note number 4, average inventory. Inventory turnover ratio is equal to COGS by average stock or average inventory. What is inventory turnover? 7 times is equal to COGS how much? 84 lakh. So average inventory. Average inventory is 12 lakh, right? We have 12 sevens or 84. 12 lakh. So now opening stock is given. We can calculate closing stock from this. So now working note number 5, calculation of closing stock. So average stock is equal to opening stock plus closing stock divided by 2. So average stock is 12 lakh. Opening stock is given how much? 11 lakh 40,000. You directly tell me the closing stock, how much you do the calculation until 12 lakh 60,000. Did everyone get it? Did you all understand how to do this? Did everyone get it? Clear? Now listen. If you look at the requirement for calculating quick ratio, we have current asset minus inventory by, do we have current liability also? Yes. So we can calculate quick ratio. For calculating fixed asset turnover, we have we have sales as well as fixed asset. Next, for calculating proprietary ratio, what do we need? What is the formula for proprietary ratio? What do we need? What is the formula? Proprietor's fund divided by total assets. Which one? This one. Total sales is 105 lakh. Gross profit is 20%. But see, total sales 20% is gross profit. Remaining 80% is no, if nothing is mentioned, it is better to take cost of goods sold only. If nothing is mentioned, we have to take cost of goods sold. Unless and until specifically, let's say, that was based on where, which question? Which question we took sales? So based on COGS, they told we took COGS. Nothing is mentioned COGS. If it is specifically mentioned based on sales, then only we will take sales. Otherwise, we will take COGS only. We should not take sales unless and until if it is specifically mentioned in the question. COGS is a better version of formula. Clear? So far, any doubt in this? We have to calculate all those things. That is what I'm going to do. No, not balance sheet. We have to do that working note. Working note number 6. Working note 3. Did you understand why we are taking 80%? Done. Working note 4, you're done. 4. Listen, for calculating proprietary fund. Listen, this is a crucial area. Listen, we can write total asset is equal to equity plus debt plus we can write reserves and equity is reserves and surplus given. Not given. Okay. Equity plus preference share capital plus current liability. Right. Total asset is equal to equity plus debt plus preference share capital plus this current liability. Is this point clear? Right. Now what is the total asset? 56 lakh something. Total asset? 52 lakh? 52 lakh 50,000 is equal to equity. We don't know. This is something which we need to calculate. Plus, listen, debt equity ratio is given as debt by equity is equal to 1 by 1.5. So I can write equity is equal to 1.5 of debt. Right. So I can substitute this part in this equation. So I can write equity as 1.5 debt. Did you all understand why we are taking 1.5 debt? Is this clear? Plus debt plus what is the preference share capital given in the question? 6 lakh. Plus what is the current liability? 9 lakh we calculated. Now calculate the value of debt. How much you are getting? So 15 lakh goes here. We get 37 lakh 50,000 divided by 2.5. How much? 15 lakhs. 15 lakh debt, right? So sorry, this is not proprietary fund. Working note 6 is debt. Sorry. Working note 6 debt, not proprietary. Clear? Any doubt in this so far? Did you all understand how did we do this? If you are having any doubt, please ask now itself. Clear? Now listen, we know that debt by equity is equal to 1 by 1.5. So equity is equal to debt into 1.5. So equity is equal to debt is 15 lakh into 1.5. How much do we get? 22 lakh 50,000. Equity is equal to 22 lakh 50,000. Clear? Now, this is the problem with the question. If we are going by this equation method, we are getting 22 lakh 50,000. But in the question, they have mentioned it as 18 lakh. That is the problem with the question. That is the reason why I told you to ignore it. Yes, equity includes. Correct. In this question, they have not mentioned anything about reserves and surplus. Huh. If you want, you can assume like that and write it. If you want to take this 18 lakh, you can assume like that and write it. But your assumption makes sense actually. Clear? Any doubt in this so far? Did you all understand? Now we have all the relevant information for calculating the ratios. So let's calculate it. First, quick ratio. So it will be 22 lakh 50,000 divided by 10. Assuming face value of one share is 10. We will take 2 lakh 25,000 as the number of outstanding shares. First, quick ratio, the formula is current asset minus inventory by current liability. So what is quick ratio? Current asset, how much? 22 lakh 50,000. We have to take closing stock value. Please don't take inventory as average inventory here. That is not correct. Minus closing stock, how much? 12 lakh 60,000. Current liability, 9 lakh. What is the quick ratio? Quick ratio is equal to 1.1:1. Is this clear to everyone? Any doubt in this? Next, second requirement, fixed asset turnover ratio. Fixed asset turnover is equal to sales by fixed asset. Fixed asset turnover is equal to, what is the sales? 105 lakh divided by fixed asset. How much? 3.5. No, it is 3.5 times. Turnover ratios are measured or expressed in terms of times. Next, third requirement is to calculate proprietary ratio. Formula is proprietary funds divided by total asset. Proprietary fund is how much in this question? 22 lakh 50,000 of equity plus 6 lakh of preference. Divided by total asset, how much? 52 lakh 50,000. How much? 0.54 or 54%. Next, fourth requirement is to calculate earnings per share. What is the formula for calculating EPS? Huh? This 22 lakh 50 includes reserves and surplus. So in this question, the formula that you need to use is PAT minus preference dividend divided by number of outstanding shares. EPS is equal to, what is the profit after tax in this question? It is mentioned 15% of total asset. And one more important thing, listen, here you cannot use the formula PAT plus interest by total asset. Why? Because interest rate is not given. So obviously you have to use PAT by total asset. That's all. Right? So what is the profit after tax in this case? 15% of total asset. Minus preference dividend minus 6 lakh into 9%. We will get 54,000. Number of outstanding shares is 2,25,000. How 2,25,000? You all understood? Value of face value of one share is 10. So value of, sorry, face value of one share is 10, then how many shares you need to issue for 22 lakh 50,000? How much? 8.3.26. Okay, sorry. This is rupees 3.26 per share. That's all. Clear? Any doubt on this? Did everyone understand? 45th question. Which one? Correct. 22 lakh 50 is equity. Plus 6 lakh is preference. Total proprietors fund by total asset. Everyone done till this point? Copy it down quickly. Huh? 4 o'clock. After finishing one more question, we can go for. After finishing one question. Okay, 46. You can take as homework. Easy question. There is nothing in this. I will tell you only one thing, only one small adjustment. I will tell you that, then you can do it. Listen. In this question, share capital, opening and closing balance of share capital is given. There is no change in that. Opening and closing balance of long-term loan is given. No change in that. Reserves and surplus, beginning it is 20 lakh. Closing it is 5 lakh. What is the difference of 5 lakh rupees? That extra 5 lakh rupees is nothing but your net profit. Clears? That's all. Apart from this question is extremely easy. You can do it. Next question number. Huh? If you are assuming that 2250 includes reserves and surplus, you have to take 1 lakh 80. If you are assuming there is no reserves and surplus, it should be 2 lakh 25,000. Material they have, since they have included, I mean, in our working, we excluded this 18 lakh. Material they have taken 1 lakh 80 only. Which one? Come, take question number 45, check it. 47, 48. Okay, you want a break now? Everyone? Or can we go after 15 minutes, after solving 47th question? After this. So look at question number 47, 46 homework. So look at question number 47. So first, look at the requirements of the question. First requirement is to calculate sales and COGS. Then sundry debtors, sundry creditors, closing stock and fixed asset we have to calculate. Now look at the question. They have given debtors velocity and this can be used for calculating sundry debtors. They have given creditors velocity which can be used for calculating sundry creditors. Stock turnover can be used for calculating closing stock, and gross profit ratio can be used for calculating both sales and COGS. Bills receivable and bills payable will be used in sundry debtors and sundry creditors calculation, and fixed asset turnover can be used for calculating the amount of fixed assets. Clear? Now listen. What could be the starting point for this question? They have given gross profit and gross profit ratio is also given. So first we can calculate sales and COGS directly. So working note number 1, question number 47. Working note 1. Sorry, not working note 1. This is the requirement itself. So first requirement, sales and COGS. Sales and COGS. In the question, it is mentioned that gross profit is equal to 4 lakh. We know that what is the gross profit percentage? 25. So 25% of sales is equal to 4 lakh rupees. So what will be the value of sales? 4 times 6. How much? 16 lakh, right? 16 lakh is the amount of sales. And COGS will be how much? We can write sales minus gross profit. Sales is 16 lakh, gross profit 4 lakh. So COGS is 12 lakh. Clear? Next, we have to calculate sundry debtors. So for sundry debtors, what is the information that we can use from the question? Debtors velocity. So what is the formula for debtors velocity? Receivables by sales into 360. Here we can assume 360 itself. Month also you can take, you will get the same answer. I think yes, or answer will change, I guess. Answer will change based on that. Here, since we are taking debtors velocity is usually measured in terms of days. They have given, but you can still calculate days, no? 90 days and 60 days. 12 by 3 is 4. 90 by 360 by 90 is also 4. So here answer will not change. 360 by 60 is also 6. 12 by 2 is also 6. Answer will not change. 360 by answer will change. So listen, debtors velocity is how much? 90 days. What is the amount of receivables? Listen, we have bills receivable of 25,000. Plus, we have to take debtors. I hope you are understanding it, right? Because trade receivables includes both debtors as well as bills receivables. Divided by sales, how much? 16 lakh. Into 360. How much debtors amount? What? 4 lakh. 3 lakh 75,000. Did you take the 75,000? Then you subtract the 25,000. If you are getting 4 lakh, that 4 lakh is the total trade receivable. From that, remove the bills receivable, you will get debtors. Did you all get 3 lakh 75,000? Any doubt? Similarly, calculate the creditors. Listen. Listen. For calculating creditors, we need purchases, right? Huh? Here, yeah, you have to take opening and closing. Average we have to take. Listen. Listen. Calculating sundry creditors is slightly different. What is the formula for suppliers velocity? It is total payables divided by credit purchases into 360. Do we have credit purchases in this case? It is not there. So first we have to calculate credit purchases. So how can we calculate credit purchases? For calculating credit purchases, we need to calculate opening stock and closing stock. Right? Listen, in the question it is mentioned that closing stock of the period is 10,000 above the opening stock. So opening stock and closing stock can be calculated using stock turnover ratio. Right? So better what we can do is, we will do the fourth requirement first, and then if we do the third requirement, it will be easy. Right? So do the fourth requirement. If you have already written it, give some space for third, go to the fourth requirement. Turnover ratio and get what? You need purchases. You don't have the purchases itself. Not same. We have to calculate. Let me solve. Fourth requirement, which is closing stock. So listen, this can be calculated using stock turnover ratio, or inventory turnover ratio is equal to COGS divided by average inventory. So stock turnover is 1.5 times is equal to what is the COGS? How much? 12 lakhs divided by. So average inventory can be calculated as, listen, let's assume opening stock as X plus closing stock is 10,000 more than the opening stock. So we can write it as X plus 10,000. Is this clear to everyone? Any doubt? Divided by 2. So now calculate the value of X, which is nothing but the opening stock. How much do we get? 2x plus 10,000 by 2 is equal to 12 lakh by 1.5. So solve it for X. What is the amount of X? 7,95,000. So this X is nothing but opening stock. So closing stock is equal to opening stock plus 10,000. Opening stock plus 10,000. We will get 8,05,000. Clear? Any doubt in this so far? So now we can calculate the credit purchases here. Yeah, we have to assume all purchases as credit because nothing is mentioned about cash purchase. COGS is equal to opening stock of raw material plus purchases of raw material minus closing stock. COGS is equal to 12 lakh, opening stock 7,95,000 plus purchases minus closing stock is 8,05,000. So what is the amount of purchases? 12,10,000. Clear? Any doubt in this? So now we can calculate the sundry creditors, which is the third requirement. Sundry creditors. So creditors velocity is equal to payables divided by credit purchases into 360. So creditors velocity is 60 days equal to payables includes sundry creditors plus bills payable. Sundry creditors plus bills payable is how much? 10,000. Credit purchases 12,10,000 into 360. So how much do we get sundry creditors? Solve it and tell me the numbers. 5,95,000. Something like that. 1,91,667. Got it? Everyone done till this point? Next. Fourth requirement is already done. Fifth one, fixed cost. Sorry, fixed asset, not fixed cost. Sorry. Fixed asset. So what is the formula that we can use for calculating fixed asset? Fixed turnover ratio. It is given fixed turnover ratio is equal to sales by fixed asset. Fixed turnover is 4 times. Sales is how much? 16 lakh by fixed asset. So fixed asset is equal to 4 lakh rupees. Done? Break. Then question number 48, recently tested question from May 2024. Slightly difficult. So listen. So they have given the Team Limited provides you the following information. 12.5% debt, which is 45 lakh. Debt to equity ratio is 1.5:1. Return on shareholders fund is 54%, which is nothing but return on equity. So this is return on equity, which is 54%. Operating ratio was 85%. What is this operating ratio? No, this is operating. Operating profit ratio is different. Operating ratio is different. Operating ratio is COGS plus operating expenses by sales. Okay. Operating profit ratio is EBIT by sales. To put it very simple, operating ratio is nothing but 1 minus operating profit margin. Sorry, 1 minus operating profit ratio. I hope you're all getting the point, right? Even if you're not understanding while solving the question, you'll understand it. Ratio of operating expenses to cost of goods sold is 2:6. Tax rate is 25%. Fixed asset is 39 lakhs. Current ratio is given 1.8:1. First requirement is to calculate interest coverage ratio. What is the formula? Interest coverage ratio is equal to EBIT by interest. So first, EBIT is not directly given in the question, but interest is something which we can calculate. So first, let's calculate the EBIT of the question. Let's calculate EBIT in the question. So how can we calculate EBIT here? Where is sales given? Return on equity is not, that will be PAT. PAT, not EBIT. Then you have to do the reverse working. See, if you understand from which point to start the question, then ratio analysis will be easy. Question number 48. Listen, working note number 1 is to calculate what? Equity. For calculating EBIT, you need equity. Equity is not directly given in the question. Only debt equity ratio is given. Debt equity ratio is 1.5:1. Debt equity ratio is equal to 1.5:1. Debt is 45 lakhs. Equity we don't know. It's equal to 1.5:1. So equity is how much? 30 lakhs, right? Equity is equal to 30 lakhs rupees. Now return on shareholders fund, return on equity is given as 54%. So working note 2 is to calculate profit after tax. So return on equity is equal to profit after tax divided by equity capital is 30 lakhs. So return on equity is how much? 54% of 30 lakhs. So profit after tax 30 lakh into 54%. How much do we get? 16,20,000. Is this clear to everyone so far? Now we have to do the reverse calculation for calculating EBIT. Working note number 3. Can you calculate EBIT and tell me the numbers? You want me to do it or you want to try? Calculate and tell me the EBIT, how much it is? I'm not sure. If you tell me the number, I can recall and tell whether it is correct or not. Correct. 27 lakh 22,500. Correct. Got it. Did everyone get this number? Got it? Quickly.
Operating to sales ratio. So one is that ratio, then profit per share. I mean, operating for the so
Did everyone get it? 27 lakh 22,500. Like correct. Is there anyone who wants to show how this number came? Did everyone get it? So everyone got this number right? Now listen, in the question it is mentioned operating ratio is 85% of sales, which means, listen, I'm just writing it for your understanding. Listen, operating expenses plus COGS is, you don't, if you want to write it as a separate note. This is not a part of the sum. I'm doing this for your understanding. Operating expenses plus COGS is equal to 85% of sales. Then what is that remaining 15%? That 15% is your EBIT, because sales minus COGS gross profit minus operating profit is EBIT. So if these two things put together, it is 85%. Remaining 15% is EBIT. So do working note number 4. 15% of sales is equal to EBIT. Working note 4, calculation of sales. 15 by 100 into sales is equal to EBIT. Did you all understand how did we form this equation? Clear to everyone? So now what is the amount of sales? 15 by 100 into sales is equal to EBIT is 27 lakh 22,500. So how much do we get sales amount? 1 crore 81 lakh 50 or 15. 50. So far clear? Did everyone understand it? So next, see, listen, for calculating interest coverage, we have EBIT and interest. For calculating gross profit, the denominator is sales. We got this number, but we need numerator gross profit, right? So how can we calculate gross profit? For that, we need to calculate COGS. So working note number 5, calculation of COGS. It is mentioned in the question, ratio of operating expenses to cost of goods sold is 2:6. So operating expenses by COGS is equal to what? 2 by 6. So this is 1 by 3. So COGS is equal to 3 times of operating expenses. Is this clear? Any doubt? Did you all understand till this point? Now what can be done is, for calculating gross profit, we have sales, we have to calculate COGS, right? So from this equation, we know that, where is the equation? 85%. Oh, yeah, it is removed. Okay. So you do one thing, right? Working note number 6, okay, 5. COGS. Okay, listen. We know that 85% of sales is equal to operating expenses plus COGS. What is 85% of sales? 85 by 100 into sales is 1 crore 81 lakh 50,000 is equal to operating expenses plus COGS can be written as what? 3 into operating expenses. So what is operating expenses? Huh? Oh, operating expenses how much? 3856. 875 is operating expenses. Now COGS is 3 times of operating expense. So what is COGS? 1 crore. Is this big number? No. Correct. Correct. Oh, this is 38 lakhs, so 1 crore. Okay, okay, makes sense. Okay. So till this point, everyone understood? Clear? Now, working note number 6, calculation of gross profit. Gross profit, which is equal to sales minus COGS. Is equal to gross profit. So what is the gross profit that we get? 65 lakh? 79,000? Clear? No, that we will do. That is a requirement. Working note I'm doing. Gross profit. Clear? No, sorry, 5. This is 6 actually. Sorry. Till this point, everyone understood? Any doubt? Clear? Now, what is the last requirement of the question? To calculate current asset, for which we can use which ratio? Current ratio is given 1.8:1. For this, okay. We have to use the balance sheet figure actually. Working note number 7. Listen. Total asset is equal to total. So first, write down the name of the working note. Working note 7. Calculation of current liability and current asset. Working note 7. You write it as current liability, not current asset. Working note 7. Current liability. Listen, we know that total asset is equal to total liability. Total asset, we have fixed asset plus current asset. On the liability side, we have debt plus equity plus current liability, right? So total asset or fixed asset is given in the question, right? How much? Okay. 39 lakhs. So 39 lakhs plus current asset is equal to debt is how much? 45 lakh plus equity how much? 30 lakhs. Current liability not given, we have to calculate, right? So 39 lakh plus current asset is equal to this number. So now we know that current asset is equal to 45 lakh plus 30 lakh minus 39 lakh plus current liability. So what is current asset is equal to? 36 lakh plus current liability. Is this clear? Any doubt so far? So now current ratio is given in the question. What is the ratio? It is 1.8:1. So current asset by current liability is equal to 1.8 by 1. So we can write current asset is equal to 1.8 into current liability. So while solving current asset, we can use these two equations and we can solve it and we can get it. Clear? Any doubt in this? Did you all understand what needs to be done? Clear? So now let's solve each of the requirements separately. First requirement is to calculate interest coverage ratio, which is EBIT by interest. So what is interest coverage? EBIT is how much? 37. Sorry, 27 lakh 22,500. Okay. Interest 500. So what is interest coverage? 4.84 times. Next, second requirement of the question is to calculate gross profit ratio, GPM. for which the formula is gross profit by sales. What is gross profit by sales? You tell me the ratio directly. Clear? Next, third requirement, current asset. So from working note 7, equating the numbers. So what is the equation? So we can write 1.8 current liability is equal to 36 lakh plus current liability, right? So 1.8 current liability is equal to 36 lakh plus current liability. 0.8 current liability is equal to 36 lakh. What is current liability? 45 lakhs. But the requirement of the question is to calculate current asset, which is you can substitute the value of current liability in any of the equation. So from equation 2, current asset is equal to 1.8 current liability. Current asset is equal to 1.8 into current liability is 45 lakh. How much? 81 lakhs. Clear? Any doubt? Understood? Copy this down quickly. Sorry. Everyone done with this? Everyone done? Right? Look at question number 49. Listen. Listen. Capital structure of JCPL Limited is as follows. Equity share capital 8 lakh. Preference share capital 6 lakh 25,000. Debentures 10%, debentures 4 lakh. Additional information is given. Profit after taxes 1 lakh 82,000. Tax rate is 30%. Operating expenses including depreciation of 90,000 being 1.5 times of EBIT. Now listen, you please ignore this depreciation figure because this is a 2013 question. Actually, there was a fourth requirement in the question which was relating to fund flow statement. For doing this fourth requirement, they gave depreciation. But now you don't have this fourth requirement, so ignore depreciation. Okay. Ignore it. So operating expenses is 1.5 times of EBIT. Clear? Any doubt? Next, equity share dividend paid is 15%. So in this question, what is the amount of equity share dividend? What is the amount of equity share dividend that the company will pay? 8 lakh is the value of 8 lakh into 0.15, 1 lakh 20,000. Preference dividend is how much? Into 0.08, 50,000. You're all understanding?
Yes.
How? Interest needs to be paid as 40,000. Market price per equity share is given 20 per share. Now listen, the first requirement is to calculate operating leverage and financial leverage. DOL, what is the formula? DFL, what is the formula? EBIT by EBT. So these two things we have to calculate, for which we have to prepare the income statement. Next, they are asking cover for preference dividend. So what is the formula? Preference dividend coverage ratio. What is the formula? Profit after tax divided by preference, similar to interest coverage ratio. EBIT by interest there. Here it is profit after tax or EAT divided by preference dividend. Cover for equity share dividend. What is the ratio? PAT minus preference dividend divided by equity dividend. EAT? Okay. Next requirement is to calculate earnings yield and price to earnings ratio. What is the price to earnings ratio formula? MPS by EPS. Earnings yield formula? Just reciprocal. EPS by MPS. That's all. Right? EPS by MPS is earnings yield. MPS by EPS is price to earnings ratio. Why do we need variable cost? Contribution is there. What can we do is, let's do the reverse working and let's see how it goes. Because if you are doing PAT, we will get EBT, EBIT. Okay, we will do one thing. Contribution minus EBIT plus operating expenses is contribution. EBIT plus fixed cost is contribution. No. EBIT plus operating expenses is contribution. Assuming all operating expenses are fixed. Got it? You understood or no? So let's do this question. We have to do the reverse calculation only. But ignore depreciation. That is irrelevant for this question. So listen, we'll start from below. Profit after tax is equal to how much? 1,82,000 minus tax from PBT. So calculate the amount of PBT and tax, you tell me. Tax at 30%. What will be the amount? 2 lakh? 6016. Okay. So this is 72,000. How much? 72, right? Oh, sorry, 78,000. Sorry. Clear? Did you all understand how did we get these numbers? Everyone understood, right? So now EBIT minus interest gives us PBT. So what is interest amount? 10% of 4 lakh. It is 40,000. This is EBIT 3 lakh. So contribution minus operating expenses is EBIT. Contribution minus operating expenses is EBIT. So what is operating expenses? It is 1.5 times of EBIT. So what will be your operating expenses? 4,50,000. So what is contribution? 7,50,000. So now we have all, you cannot calculate sales here. Variable cost ratio is not given or contribution ratio is not given. So we cannot calculate sales. We don't need sales also actually. Clear? Those who are done, calculate DOL, DFL. What? Everyone done with this? What is DOL and DFL? So first requirement, DOL is equal to how much? 2.5 times. DFL is 1.15 times. Second requirement is to calculate. First, we will do preference dividend coverage ratio. Listen, the formula for preference dividend coverage ratio is equal to profit after tax divided by preference dividend. Yes. How? 1,20,000, correct. 1,20,000 is the dividend. So preference dividend coverage ratio is equal to, what is the profit after tax given in the question? 1,82,000 divided by preference dividend, how much? So how much do we get? 3.64 times. Which means for every 1 rupee of preference dividend that you have to pay, you have 3.64 rupees of profit after tax. Next, equity dividend coverage ratio is equal to profit after tax minus preference dividend divided by equity dividend. So what is profit after tax? 1,82,000, out of which 50,000 is paid as dividend to the preference shareholders, divided by equity dividend, how much? 1,20,000. How much do we get? 132 by 120, 1.1. 1.1 times. Did you all understand this? Any doubt? Clear to everyone? I told you a different number. Sorry, I thought it was 50,000. I thought 50,000. Sorry. Now let's do the third requirement of the question. Earnings yield and price to earnings ratio. Requirement 3. Earnings yield. What is the formula for calculating earnings yield? It is equal to, what is the formula? EPS by MPS. What do we get? EPS is how much? Oh, first we have to calculate EPS for the fleet. Let's calculate EPS. It is not directly given in the question. EPS is equal to earnings available to equity shareholders divided by number of outstanding shares. So what is the earnings available to equity shareholders? 1,32,000, which is 1,82,000 profit after tax minus 50,000 preference dividend divided by number of shares is how much? How much? 80,000. What is the EPS? Equal to rupees 1.65 per share. So what is earnings yield? Is equal to 1.65 rupees of EPS by market price per share is 20. How much? Did you all understand? Clear? Any doubt on this? Next, calculate price to earnings ratio, for which the formula is MPS by EPS. Price to earnings is just 1 divided by 8.25. So 20 by 1.65, how much do we get? 12.12 times. Clear? Did everyone get these answers? Any doubt in this? Clear? So let's move to the next question. Question number 50, listen. This is similar to a question just now that we did. Question number 44. In this question, we are having fixed asset to proprietary ratio 75%. So remaining 25% is what? Net working capital, no? Similar to that, question number 50. Listen, fixed asset to proprietary. The numbers is also not changed, 75%. So remaining 25% is net working capital, which is 12 lakh. And similar to the previous question, we don't have long-term debt also. Clear? You will be able to solve it, or you want me to do it in the class? You will do it, right? Okay, so 50 years homework. So 51, nothing. Yesterday only we discussed DuPont model. What is the first component of DuPont model? Net profit margin into total asset turnover into equity multiplier, which is total asset by total equity. It will not take more than a minute to solve this question. All the figures are given. You can just solve it. Question number 52. Yeah, it was easy only, but question number 52 we will do in the class. 52 we will do. Huh? Listen, 53 is extremely easy. You can see that. Listen, listen. They have given non-current asset and non-current asset to sales, current asset to current liability. Everything is given. You can take any one of these as starting point. After solving one working note, you will do what you will be able, you will know what to do next. This is homework. 52 we will solve in the class. 53 homework. 54 I will solve in the class. 55, if you remember, yesterday we solved on question 38. You remember 150% of direct costs. Look at question number 38, similar kind of question. 52 I will do.
That's it.
55 is homework, you can do similar to question number 38. Please make a note of it. 56 homework, easy question. 57 we will do in the class. 58 just now we did one question, operating expenses and balance sheet. This one you can take it as homework. 59 I will do in the class. So 50 on homework. Look at question number 52. 56. 52, 54. Listen, 52nd question. Listen, 52nd question. Gross profit is given 60,000. Gross profit margin is given 20%. So this should be taken as the starting point of the question and we can get the sales amount. And in this question, they are not asking us to prepare, they are not asking us to prepare P&L. We have to prepare only the balance sheet. That's all. So I'll just do this question here itself. Then total asset turnover. From this, we can calculate total asset. From this, we can calculate equity. Then current ratio is given. Listen, liquid asset to current liability is what? Liquid asset to current liability. Quick ratio, which can be used for calculating inventories. Then credit sales to total sales is given. So where do we use this information? For calculating receivables. Because we will have receivables only when we are having credit sales. For cash sales, no receivables, right? So average collection period, again, we will use it for calculating receivables. So let's do the first working note, calculation of sales, question number 52. And one more thing in this question, no non-current liability, no long-term debt, only net worth and current liability. That's all. Question number 52, working note 1, sales. So you calculate and tell me the sales amount, how much it is? 3 lakhs. You all understood how how did we get 3 lakhs? Gross profit 60,000 divided by 20%. So sales is equal to 3 lakh rupees. You want me to show how the number came or did you all understand? Clear? Show. Gross profit. Sorry. In the question, gross profit ratio is 20%. So 20% of sales is equal to gross profit. 20 by 100 into sales is equal to 60,000. If you solve this equation, you will get sales is equal to 3 lakh rupees. Understood? Next, what we can calculate is we can calculate total asset using total asset turnover ratio. Working note 2, total asset. Sales by total asset is equal to how many times it is? 0.3 by 1. So what is sales? It is 3 lakhs by total asset we don't know is equal to 0.3. So what is total asset? 10 lakh rupees. Did you all understand? Clear? Next, we have net worth to total asset. What is net worth? That is nothing but equity, right? Working note number 3, equity or net worth. So net worth to total asset is 0.9:1. Net worth by total asset is equal to 0.9 by 1. So what is net worth? 9 lakh, right? Clear? You all understood how did we get 9 lakh, right? So now listen. Here we can fill net worth is 9 lakh. What will be the current liability? Current liability, how much? It has to be 1 lakh. Because we know total of asset is 10 lakh. So total of liability should also be 10 lakh. So remaining 1 lakh is current liability. Clear? So next, now since we know current liability is equal to 1 lakh, we can use current ratio to calculate current assets. So working note 4. Current assets. Current ratio is 1.5:1. Current ratio is equal to current asset by current liability, which is 1.5 by 1 is equal to current asset by current liability of 1 lakh. So what is current asset? 1 lakh 50,000. Everyone done? So now listen, we know total asset is how much? 10 lakh, out of which current asset is 1 lakh 50. So what is the remaining amount? Fixed asset of 8 lakh 50,000. So working note number 5. Fixed assets. Total asset is equal to current asset plus fixed asset. Total asset is 10 lakh. Current asset is 1.5 lakh. So what is fixed asset? 8 lakh 50,000 or 8.5 lakhs. Clear so far? Any doubt? So now we have stock turnover is given. No, it is not given. Inventory we can calculate using liquid asset to current liability ratio. Working note number 6. Inventory. Meanwhile, write down fixed asset is equal to 8 lakh 50,000. Quick ratio is equal to current asset minus inventory by current liability. What is the quick ratio? It is 1:1. Current asset 1 lakh 50,000 minus inventory we don't know. Current liability is 1 lakh. So what is the amount of inventory? 50,000 rupees. Everyone done till this point? Clear? Any doubt? So now you do one thing. You calculate the amount of debtors and the balancing figure is cash. You calculated stock is 50,000. Calculate the amount of debtors and cash. Tell me the number. What is the amount of debtors? Debtors, how much? 40,000 and cash? Debtors 40 and cash 60. Did everyone get these numbers clear? I hope you all took credit sales for calculating debtors, right? You multiplied the total sales with 80%, if I'm not wrong, right? Everyone done? Done? Calculation of debtors. You calculated or you're simply copying down the numbers? You didn't do that. Working note number 7, debtors. Receivable days is equal to debtors by credit sales into 360. So what are the receivable days given in the question? Receivable days, how much? 60 days is equal to debtors value, we don't know, we have to calculate, divided by the total sales is how much? We calculated, no? 3 lakh. Out of the 3 lakh, 80% is credit sales. So it is 3 lakh into 80%, which is 2 lakh 40,000 into 360. So debtors is equal to 2 lakh 40,000 by 60. How much do we get? 6 4s are 24. So 40,000. Clear? And remaining balancing 60,000 is cash. 53rd question, homework. 54, I will solve it now. Look at question number 54. All sales are on credit basis and the total sales is 30 lakh rupees. Gross profit is given as 25%. Stock turnover based on COGS is 6 times. Liquidity ratio 1:1. Current ratio 1.5:1. Receivable collection period is given 2 months or 60 days. Then reserves and surplus to capital ratio. This is given for the bifurcation. Capital gearing ratio 0.5. What is the formula for calculating capital gearing ratio? What is the formula? Debt plus preference capital divided by equity. Fixed asset to net worth is 1.2:1. Requirement of the question is to calculate closing stock, fixed asset, current asset, debtors, and net worth. Listen, in this question, have they given anything about opening stock? Nothing is mentioned. So, while calculating stock turnover, we have to take closing stock and not average stock. Clear? Question number 54. So, first closing stock can be calculated using stock turnover ratio. Requirement 1. Closing stock. What is the inventory turnover ratio? Formula, it is COGS by closing stock. Inventory turnover is equal to how many times? 6 is equal to COGS. How much? Did you all understand how it is 22 lakh 50,000? 30 lakh 25% is gross profit. So remaining 70%, 75% is COGS. 30 lakh into 75% is COGS by closing stock. Now what is closing stock? 3,75,000. Is this clear to everyone? Any doubt? Now, second requirement of the question is to calculate fixed asset. In this question, fixed asset turnover is calculated on COGS. So, requirement 2. Fixed asset. Fixed asset turnover ratio is equal to sales by fixed asset. Oh, sorry, it is calculated on COGS. Well, in this question, it is COGS by fixed asset. So, what is the amount of fixed asset? You tell the numbers. Fixed asset turnover is 1.5. COGS is 22 lakh 50,000 by fixed asset. So, it is 1 lakh 50,000. Sorry, 15 lakh. Clear? Any doubt? Next requirement of the question is to calculate current asset. But listen, before calculating current asset, first we can calculate net worth because it is given fixed asset to net worth. So we can do the fifth requirement of the question. Net worth. Fixed asset to net worth is equal to 1.2. So 15 lakh by net worth is equal to 1.2. What is net worth? 15 lakh by 1.2. 12 lakh 50,000. Clear? Any doubt in this? Next, we have receivable collection period, based on which we can calculate. We can calculate current asset. No, for that we can use current ratio. Do we have current liabilities? No. How can we calculate current asset? Net worth plus dividend plus preference. That makes. We have inventory. No, correct. We can. That is a shorter way of doing it. That is easy actually. Requirement 3. Calculation of current asset. I didn't see the liquidity ratio over here. It is given. Okay. So first, current asset by current liability is equal to how much? 1.5. So we can write the first equation. Current asset is equal to 1.5 times current liability. Next, what do we have? Liquidity ratio. This is equation 1. Next, current asset minus inventory by current liability is equal to 1 by 1. So current asset minus inventory, how much we calculated? 3,75,000 by current liability is equal to 1 by 1. So current asset is equal to current liability plus 3,75,000. This can be written as equation 2. So solve both the equation and tell me the current asset figures. It is of no use actually in this question. Everyone getting 11. How 11 lakh 25,000? Oh, 0.5 by. No, it is 7 lakh 50,000. 7 lakh 50,000. Okay, sorry. Into 1.5 makes sense. Sorry. So 11 lakh 25,000 is current asset. Did everyone get this number? Everyone, last bench. Did you all get? You didn't get it. Not getting that answer. Then let me check. I will come. So those who are done, please calculate the value of debtors using receivable days. Finish it. You do the debtors calculation. What is the amount of debtors? How much? Did everyone get 5 lakh for debtors? Got it? Debtors 5 lakh. So listen, question number 55 homework similar to question number 38. Before that, everyone done with this? Is there anyone who is still doing it? Question number 56, homework 57, I will do now. Only 57 and 59. We will call it a day. 57, 59. Listen, 57 is very small question. Listen. From the following information, complete the given balance sheet. That's all. We don't need to prepare P&L. Equity share capital is 2 lakh, which is directly given in the balance sheet also. Total debt to owner's equity is 0.75. So here the remaining part, which is long-term debt plus current debt, is 75% of this 2 lakh rupees. Which one? I don't know. The note is with him. Check. Total asset turnover is 2 times. Inventory turnover is 8 times. Fixed asset to owner's equity is 0.6. Current debt to total debt is given 0.4. Right. So this question can be solved easily. Just listen. Question number 57. I will do it quickly. So first, we can use first working note, we can calculate total debt. Total debt. So total debt to total equity or owner's equity is equal to, write down, equal to 0.75. So what is owner's equity in this question? 2 lakh equal to 0.75. So what is total? What? Sorry, not total asset, total liability. Sorry. Total debt, sorry. Total debt is equal to how much? 1,50,000. Now listen, in the question it is mentioned that long current debt to total debt is 0.4. So working note to calculate current debt. Short term. Current debt is equal to 1,50,000 into 0.4, 60,000, right? 60,000. Did you all understand this part? Is it clear? Now listen, on the liability side, current debt is 60,000. What will be the long term debt? 90,000. So totally it is 3,50,000. Clear? So next we can use, how do we calculate sales in this? Total asset turnover is given. Oh, we can calculate, okay, sales from that. From sales we can calculate other figures. Okay, got it. And listen, in this question we cannot calculate COGS. So inventory turnover should be based on sales. Working note number 3, sales asset turnover ratio is equal to how many times? 2 times, which is sales by total asset. 2 is equal to sales is something which we don't know. What is the total asset? 3,50,000. So total sales will be 7 lakh. Did everyone understand this point? How did we get these numbers clear? So now based on sales, we can calculate inventory. So working note number 4. Inventory. Inventory turnover ratio is equal to, in this question, it is sales by inventory. So inventory turnover ratio, how many times? 8 times. 8 is equal to sales is 7 lakh by inventory. Inventory, how much? Next. So what are all what we have? Fixed asset, did we calculate? Fixed asset is already calculated or not? No. Fixed asset is not calculated. Okay. So here now we know the amount of inventory. Then what? Fixed asset to owner's equity is given. So working note number 5. Fixed asset by equity is equal to 0.6. So what is the amount of equity we calculated? It is given in the question 2 lakh. So amount of fixed asset is equal to 1,20,000. So now listen, fixed asset is 1,20,000, inventory 87,500. What is the cash balance? 140,500. 142,500. That's all. So now both the sides of the equation, I mean balance sheet, it is 3,50,000.
The cash we got.
Cash is? Yes, cash is the balance sheet. Everyone done with this question? Listen, if you're done, you try 59 by yourself. No, now. You will not be leaving the class without completing 59 questions. You're done? So 10 lakhs. Listen, for 59, sorry, 58 is not very easy. I will do it. Not 59, 59. 58 is easy. 58 homework, 59 only. I will do it. 58 homework I gave. Similar to this question only, we solved one question today. Exactly same. No, not. You want me to start? He wants me to start a new chapter. What? Listen, listen. 59th question, listen, I will do it. You don't try it, just listen. Do it along with me. Don't try and don't do it wrongly, then don't take, it will take time. So just listen first and then read. Following are the data in respect of ABC industry for the year ended 31st March 2022. Listen, here debt to total asset ratio is given, which is 0.4. Now, what is important to understand here is, listen, what is important to understand here is total asset is given, which is 50 lakhs, right? So what is debt to total asset? It is 0.4. So what is 40% of total asset? 20 lakh. What is that 20 lakh? These long-term debt and accounts payable. Both put together, it is 20 lakh. Right? You're all understanding it. Long-term debt. So what will be the reserves and surplus in this question then? 10 lakhs. I hope you're all understanding it. Did you all get it? Any doubt in this? Clear? Now long-term debt to total equity is given 30%. Gross profit margin on sale is 20%. Accounts pay receivable is 36 days. Quick ratio 0.9. Inventory days is 55 days. COGS 60 lakh. Now from where you can start this question? No, we can calculate the sales first. But what is the purpose of doing sales here? Oh, for calculating receivables, we need sales. Okay. In this question, if you are taking it as only long-term debt, nothing is mentioned with reference to accounts payable. So you cannot calculate accounts payable itself because reserves and surplus is also not given. For that, you should know reserves and surplus. No. If you are taking only this 20 lakh, then you can't say reserves and surplus is 10 lakh. So question number 59. Working note number 1. Sales. COGS is given 64 lakh. Gross profit is 20%. So say cost of goods sold is how many percentage of sales? In this question, COGS is how many percentage of sales? 80%. So 80 percentage of sales is equal to COGS here. So 80 by 100 into sales is equal to COGS is 64 lakhs. So what is the amount of sales it is? Sales. Clears? So now working note number 2, we can calculate receivables. What is the receivable days given in the question? It is 36 days. So receivable days is equal to receivables by credit sales into 360. So 60 days is equal to, 36 days, extremely sorry. 36 days is equal to receivables how much? We don't know. By sales how much? 80 lakh into 360. So what is the amount of receivables? Did everyone get it? 8 lakh rupees. Clear? Next, what can we calculate here? We have long-term debt to equity ratio. But before that, let's calculate the inventory. Working note number 3. Inventory turnover. Inventory turnover is equal to COGS divided by inventory amount. Huh? Oh, sorry. This is not turnover. Sorry. The formula will be inventory by COGS into 360. Inventory holding period is equal to inventory by COGS into 360. So what is the inventory holding period? You calculate the amount of inventory and tell me how much it is. Decimals. Decimal you're getting. 77,777. Did you all understand? How did we get these numbers? So write down 977,777. Receivables how much? 8 lakh. Here now we can use long-term to equity ratio to calculate long-term debt. To calculate working note number 4, long-term. Long-term debt to equity is equal to 0.3. So long-term debt, we don't know. Equity, how much? 30 lakh is equal to 0.3. Did you all understand how equity is 30 lakh? 20 lakh of share capital plus 10 lakh of reserves and surplus. So long-term debt is equal to 9 lakh rupees. Clear to everyone? So now long-term to fixed asset is given, no? No, we calculated, no. Sorry? Payables, yeah, that will be the balancing figure. So long-term debt is 9 lakh. What is the accounts payable? 11 lakhs. Next, we have to calculate fixed asset. Then cash will be the balancing figure on this side. How do we calculate fixed asset here? Quick ratio, how do we calculate cash? Okay, got it. Now, like that we can. So fixed asset will be the balancing figure here, correct. Nothing is given with reference to fixed asset. Only, correct. Okay. So quick ratio, how much? 0.9. So working note number 5. Cash. So quick ratio is 0.9. So 0.9 is equal to current asset minus inventory, how much? 977,777 by current liability is 11 lakh. So what is the amount of cash? 77,777. Oh no, not. This will be 9 lakh 90. So how much cash? 1 lakh 92. 12 lakh 12,223, right? Cash. Oh, sorry. I forgot. Sorry. So, what is current asset? No, that we can calculate. Do that. So, correct. So, quick asset is equal to 9 lakh 90,000. Quick asset is 9 lakh 90,000, which includes only receivables and cash. So, receivable is 8 lakh. So, remaining 1 lakh 90,000 is cash. Clear? Did you all understand this? From there, the second last bench, you got it. So what is the balancing figure fixed asset? 30 lakh 32,000. If quick asset is 9 lakh 90,000, we can write it as receivable plus cash is equal to 9 lakh 90,000. So we know receivables it is 1 lakh 80,000, right? Sorry, receivable is 8 lakh plus cash is, got it? So cash is equal to 1 lakh 90,000. Everyone done with this? Long-term debt to equity ratio was 0. No, equity share capital is 20 lakh. Reserves and surplus 10. Everyone done till this point? So tomorrow we will start with the next chapter, working capital. And tomorrow we will try to finish it.